Hey, what's up guys? John here. Nearly half of all small restaurants in America are missing rent. They're behind on rent. What does this signal? I believe this is something that we can all learn from, because as Jerome Powell continues to increase interest rates, it's likely going to only increase as consumers have less money to spend. But as you know, on this channel, I talk about personal finance, real estate investing. As we're concerned, we have to really pay close attention to what's happening to small business in America. There's over 30 million small businesses in America. A lot of the communication and conversation is based around how corporations are the greedy ones, over corporations issue just such a small fraction of value to America. The real value is created on the backs of small business, and we're seeing this decimation that's occurring right now across restaurants and small businesses. It signals to us big pain coming, especially as Jerome Powell continues to hike rates and the economy continues to contract. I believe what we're going to start to see is foreclosures at levels we have not seen before, and we're going to start to see massive economic loss at levels, again, that we have not seen before. In this video, I'm going to walk you through exactly what's going on. Please hit the like button. Hit the like button. YouTube's going to share this content to educate more people about what's really going on in the economy. Look at this. Nearly half of small restaurant business couldn't pay rent in October. Nearly 50% of small restaurant business were unable to pay rent in October, a reversal of progress made throughout the previous few months. In September, 36% of restaurants couldn't pay their rent, while in August and July, the number was 46 and 45% respectively. New data from Alignable shows that rent delinquency among other small businesses jumped 7% in October, with restaurants well above the national average of 37% of small business owners who couldn't pay. Only the automotive and education sectors fared worse than restaurants on the month. At 49%, the restaurant sector reached a new rent delinquency high in October. Alignable attributes the trend to a drop in traffic due to inflationary pressures hitting consumers. The macroeconomic environment is also forcing higher rent prices for commercial properties, likely pressuring small businesses in favor of bigger, well-capitalized chains. Rent inflation is expected to remain high into 2023, according to research from the Federal Reserve Bank of San Francisco. So you have a situation where utilities are increasing, wages are increasing, food costs are increasing, everything is increasing, yet the consumer has less money to spend. This is going to be just going to be a recipe for disaster for small business. That said, the Research Center notes that a burst of consumer activity in November and December could provide a much-needed tailwind, and indeed, the holiday season tends to be busy for much of the industry as more people head out to shop and socialize. Well, if you look at the price of turkeys and the price of travel, I believe there's going to likely be a lot less travel this year than it was last year. And I think that the upward demand that they are hoping for may not come to fruition at the capacity that they're expecting. One potentially major challenge looms this year, however. The labor forecast for independent restaurants heading into the holidays shows that just 17% of small restaurant owners plan to hire in Q4, down from 56% last year. Not being able to fully staff restaurants has been an industry-wide issue for over 2 years and is forcing operators to trim hours and leave orders unfulfilled. A new report from Data Essential found that the average restaurant is now open for 6.4 fewer hours than it was 3 years prior, translating to a decline of 7.5%. Now, the restaurants that I go to, and I eat out quite frequently, they're all either increasing their prices or they're simply out of stock. We're starting to see that more and more. That's becoming the normal. Even when you go to Whole Foods, you go to these shopping chains, you're starting to see they're out of stock more often. Things are a little bit harder to come by. Not dramatically, but we're starting to get more immune and accustomed to shortages because of these and this is all a challenge for small business. When small business is paying more for it and they simply can't get everything that they were accustomed to getting before, it just makes it so much harder. Because these lingering challenges, the September Small Business Optimism Index marked the 9th consecutive month below the 48-year average of 98. 30% of small business owners maintained that inflation is the single most important challenge for them, and those inflationary pressures have destabilized pandemic-related recovery, and many small business restaurant operators experienced a sales rebound in 2021. According to the NPD Group, the independent restaurant sector grew its footprint by 1% in 2021, for instance, while visits jumped by 12%. Although more small business owners expect conditions to improve throughout the next 6 months, I would not bet on that. Up 10 points from July, most small business owners, 74%, say that they are uncertain about what to expect next. I mean, we were in a low interest rate environment that was flush with cash. Everyone had money. I mean, for us to think that that is normal is not realistic. We are likely going to be stepping into a situation where they're going to continue increasing rates, the economy is going to continue contracting, and we're going to see things get much, much worse. Now, there's a couple ways to look at this. There's one way, it's saying, okay, things are going to get worse, doom and gloom, end of the world. No. I mean, what we simply should be doing with this information is realizing where things are likely going, what we should be doing currently to position ourselves and our family for this upcoming change. We're likely going to see things, strip centers, restaurants. We're going to start seeing real estate assets start to come down in value as interest rates rise and there's less stable anchor tenants. We're going to start seeing less and less of these stable tenants to choose from. We're going to start to see a lot of things get repurposed, a lot of real estate assets get repurposed. These strip centers are going to start changing into storage units, e-commerce, drop-off hubs. We're going to start seeing ghost kitchens. We're going to start seeing all this change is coming. This is what we're looking at. We're looking at change. When you're seeing 50% of restaurants that are missing rent, 49% missing rent in October, that signals change is coming. We are looking at change. If there is a cause for optimism, the Kiplinger Economic Outlook predicts inflation to drop from 8% to 3.5% by the end of the next year. They think that we're going to go from 8% to 3.5% by next year, and it's going to be a smooth transition. That is absolutely not going to happen. If we do go from 8% to 3.5%, the interest rates, the economy as a whole would be coming to a grinding halt. That would not happen organically. That wouldn't be a seamless soft landing. Perhaps the biggest question then is how patient landlords are willing to be. Well, a lot of landlords don't have the flexibility of being patient. When insurance costs are rising, property taxes are rising, their costs are rising, and now the cost to borrow money is getting much, much more expensive. And a lot of these landlords, they're not sitting on long-term fixed rate debt. They're going to have to refinance, many of them, at the worst possible time. And they're going to try to push these costs off to the tenant. If the tenant doesn't have the money, that's all going to fall back on the landlord. 7% surge in small business rent delinquency in October. What do you think about this situation? I personally believe how we're going to start to see the next 6 months, the next 12 months is going to be like this. We're going to probably see another hike next meeting in December. We're going to see another rate hike coming. When that rate hike comes in, I believe what's going to follow is going to be increased interest rates on 30-year fixed rate mortgages. I believe mortgage rates are going to go somewhere between 9 and 10% over the next 3 to 6 months. We're going to start to really see that. Right now, when you're looking at mortgage rates, even if you have great credit, 7.9% if you have a 740 and above credit score. If you have a 640 and below, or 640, between 620 and 660, you're looking somewhere around 8.25% for a 30-year fixed rate mortgage. So we're going to start to see all this change happening. We're seeing it right now in small business, but what we're going to start to see is what happens with these small business owners. You have 30 million of them. When their business is struggling and they're not able to refinance their properties because interest rates are through the roof and they don't have the stable income, they're going to be forced to either rent their properties out or they're going to be forced to sell them. I believe we're going to start to see that by the millions of property owners over the coming year or two. We're going to start seeing all of these homeowners that are trying to pivot and move with the economy because everything's going through such a massive change. And if their home is the most expensive asset that they own, they have all their equity, they have their nest egg in that property, they only have a couple options, one of which is not just to stay there for free because they don't have money coming in. They're going to have expenses, they're going to have property taxes, they're going to have living costs. They're going to need to get that money from somewhere. So it's either going to be through rent or through selling. I believe we're going to start to see massive, massive change come throughout the housing market, throughout the commercial real estate space, throughout industrial, throughout everything. I believe we're going to see changes coming everywhere in this economy. And being positioned for that is probably the best thing. So having great credit, having income streams that are going to do well over the next 1 to 3 years. You want to be in the right industry right now. This is the big question you have to ask yourself. Being honest with yourself, saying, am I in a position right now? Am I in the right career that's going to flourish? If not, that's not a problem. You have some time. I would pick up some books. I would start learning. I would start studying and positioning myself to where I can move in another direction when things hit the fan. That's the smartest move. the worst thing to do is to know that the situation that you're in or the career that you're in might not be doing well and to do nothing about it. Action is always key. Action is key. I believe we're stepping into a massive opportunity. Massive wealth will be created by smart and savvy entrepreneurs, and I believe that you'll make a lot of money and do extremely well for yourself if you just look at the writing on the wall. This is what's happening. This is what's happening to small business owners. This is what's happening to America. Drop your comments below. Let's have a conversation about this. Hit the like button, subscribe here. Subscribe to my second channel also. And if you need help fixing your credit, we would love to help you at CashNow.Video. Call us at 561-430-5900. That's 561-430-5900 to go to CashNow.Video. And LinkedIn, Twitter, Instagram, and TikTok up in the banner. Feel free to click there and subscribe and follow me for short form content. And I'll catch you guys in the next video.